Hello everyone, here are the latest market news on January the 30th, 2020. Economic growth in the U.S. rises moderately in fourth quarter. The U.S. economy likely maintained a moderate pace of growth in the fourth quarter but probably again fell short of the Trump administration's 3% annual growth target due to slump in business investment amid damaging trade tensions. At the same time, the Commerce Department's gross domestic product data on Thursday will likely show that the Federal Reserve's 3 interest rate cuts in 2019 helped to keep the longest expansion in history, now in its 11th year on track, and avoid a downturn. Gross domestic product probably increased at 2.1% year-to-year rate in the fourth quarter as lower borrowing costs encouraged purchases of motor vehicles, houses, and other big-ticket items. Meanwhile, growth estimates for 2019 are converging around 2.5%, which would be slower than the 2.9% marked in 2018. Economists estimate the speed at which the economy can grow over a long period without surging inflation at around 1.8%. Tesla climbs amid strong fourth quarter reports. Tesla Inc. vowed to increase the vehicle sales by more than a third this year while posting upbeat fourth-quarter results, giving investors more reason to believe the electric car maker has put past problems behind it. The company's adjusted earnings per share of $2.14 for the fourth quarter topped the $1.77 a share that analysts surveyed by FactSet had predicted. Net income fell to $105 million from $140 million a year earlier. The electric giant's stock, which has nearly doubled in the past year, surged 13% in aftermarket trading on Wednesday following earnings report. Tesla's share hit the $600 mark for the first time. The company aims to deliver more than 500,000 vehicles globally in 2020, up from 367,000 last year. That goal relies heavily on churning out more vehicles from Tesla's newly opened China assembly plant. Global shares tumble amid China's virus impact. Global share markets continued to fall on Thursday as the rising death toll from a virus spreading from China led airlines to cut flights and stores to close, increasing pressure on the world's second-largest economy as fears of a pandemic grow. MSCI's broadest index of Asia-Pacific shares outside Japan decreased 2% to a 7-week low, marking its sixth straight day of declines. Japan's Nikkei fell nearly 2%, while Hong Kong's Hang Seng lost 2.3% and Taiwan's benchmark index slumped 5.8% in its first session since the Lunar New Year break. European stocks are also set to fall, with Euro Stoxx 50 futures and DAX futures are down 0.8%. FTSE futures point to a negative open in London. Meantime, U.S. stock futures down 0.6% suggest a negative open on Wall Street. Oil prices fall amid rise in U.S. inventories. Oil prices declined on Thursday amid a bigger-than-expected increase in U.S. crude stocks, while concerns regarding economic impact on the Wuhan virus in China, which has already killed 170 people, also added to the negative tone. International benchmark Brent crude futures fell 95 cents or 1.6% to $58.86 a barrel, having risen 0.1% on Wednesday. U.S. West Texas Intermediate crude contract slumped to 84 cents or 1.6% to $52.49 a barrel after dropping 0.3% in the previous session. According to the U.S. Energy Information Administration, country's crude oil inventories rose by more than 7 times marked expectations, gaining 3.5 million barrels in the week to January the 24th. Gasoline stocks rose to a record high, increasing for a 12th consecutive week to 261.1 million barrels, the EIA said.